Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. This segment is brought to you by Commercial Agent Success Strategies. It is video training for commercial brokerage firms. Check it out at commercialagentsuccess.com. Well, today we're talking about hospitality. We are talking about the hotel industry. Please welcome my next guest. It's Michael Bellisario. He's Senior Analyst, Hotel REITs and Hotel Brands with Baird, and he's joining us on the phone today. Michael, thanks for joining us.
Thanks for having me.
Well, Michael, as you're analyzing the risk and the potential returns of in the hotel world, and you look at, as we're talking today, it's January 9th, and we're in a I don't know if we're in the middle or the end or where we are in the government shutdown, but and we've had some stock market gyrations. Any changes in your outlook with recent goings on?
Yeah, I think the answer is yes. Washington, D.C. broadly is a big market for a handful of the hotel REITs we cover. Some of them have double-digit percentage exposure there. And the things that you got to remember is, one, it's a net negative. It's just how much of a net negative and how long does it last. Right? It's January. It's a slow period for hotels. But on the margin, it's not great, and it will definitely impact demand in D.C., the outer rings, certain parts of Virginia, possibly up to Philadelphia. A lot of national parks and national monuments are closed too, so you might see some leisure demand impacted on the weekends. But again, it's January. It's not the highest demand period, but it's something we're keeping a close eye on, and it's more of a near-term risk that eventually will get resolved, but we're keeping our eye on it.
Yeah. Well, what do you think overall for hotel performance moving forward through 2019? What do you expect?
Yeah, for the overall industry, we think 2019 is going to be pretty similar to the last couple of years. Call it 2.5-ish, maybe a little bit more in terms of RevPAR. Demand is solid. Everyone's got a job. Businesses are still traveling. Obviously, there are a lot of risks out there. I think more headline and perceived than actual risks, but things are okay. They're trending in the right direction, just that the slope of the curve is pretty flat right now.
And do you see any differences in performance trends and projections for the different types of hotels, like limited service versus full service, boutique, or anything?
Yeah, we definitely have. And over the last 12 to 18 months, there's been a divergence. It's big, but it's also on a relative basis between full service and select service hotels or limited service hotels. And I think one thing that we've seen is it's hard for hotel operators to push rate. Customers are smarter. Businesses are smarter. Technology has improved. Pricing transparency has improved. The analog I use is TrueCar in the car buying industry. Just the consumers are smarter. So in order to do that, or in order to get around that, we're seeing full service hotels, performance-wise, outperforming because they have parking revenues that they can increase. They have a greater percentage of the revenues coming from restaurants or bar. They can increase those revenues. Meeting space. It's a lot harder to raise your revenues when all you have is a rooms product, which is what a standard Hilton Garden Inn, Hampton Inn, Hyatt Place has. So we've seen that over the last 12 to 18 months as the business traveler and group business. I think convention business has remained pretty solid. All those other levers and all those other pieces of the business that the full-service hotels have, that's caused them to be relative outperformers versus the select service hotels over the last year or two. And we think that probably continues for the next 12-plus months.
All right, well, that makes sense. And when you look at the reduction in gas and oil prices, you look at the government shutdown, are there any cities, any market areas where you see that are winners or losers?
Yeah, I think the markets that have been losers, it's really the small cities in Texas, and Houston is the big dot on the map there. I think a lot of the damage has been done already, whether oil's at $40, $50, $60. It's a lot lower than it was several years ago. To an extent, New Orleans has some oil-related business, as does Denver. But the big high beta markets in terms of live and die by the fracking and the exploration business, those are the small cities in Texas that aren't as institutionally relevant from our perspective on the public market side. But yeah, we've seen performance fall off a cliff in Texas. It's rebounded a bit, and frankly, one of the best things, it was a horrible, tragic event, but one of the best things to happen for Texas in the hotel performance has been the hurricane, right? It's led to a lot of non-oil and gas related business, the rebuilding business, the insurance business, the FEMA business coming back to the city and the state there, and that's caused performance, hotel performance at least, to stabilize as oil has come back down off its highs over the last few years. But yeah, I think the damage has been done already, though, and a lot of hotel operators have already done a lot of diversification and tried to move away from oil and gas and try to get different types of groups to diversify their base of business, and that's helped too.
Right. We're talking with Michael Bellisario with Baird about the hotel industry. So, Michael, what are you seeing for trends for hotel REITs lately, and what do you expect moving forward?
Well, the stocks have gotten crushed. If you look at hotel REITs in the fourth quarter, right, higher beta, cyclical, investors had broader growth concerns. They sold off hard, more than the market, more than other real estate sectors. Actually, the RMZ, the broader REIT index, actually performed very well from February last year into year end, just more of a defensive trade. We actually published our hotel REIT outlook note a couple of days ago, and our position is to lean in. We think this creates a buying opportunity. We upgraded one stock, Chesapeake Lodging Trust. We have more outperforms on our list than we have in a long time, and really it's a function of valuation's cheap. The stocks were trading at 10.5, 11 times EBITDA. They were trading 15 to 30% below what we thought the real estate was worth, and they're set up for a bounce. And a lot of the macro concerns we think will continue to be concerns, but it won't actually lead to materially slower RevPAR growth. So we think the setup is pretty good for the stocks to work. A lot of the calls a little bit more tactical and more of a bounce, but fundamentals are fine, right? 2%, 2.5% RevPAR growth. The bottom line remains challenged because there's a lot of cost pressure in the business, but the transaction market has held up well. The financing market has held up well. There's a lot of capital chasing deals, and the underlying real estate values have held up, and the stocks are cheap relative to their breakup values.
Okay. And does immigration issues, do they impact the hotel industry much?
Yeah, one thing we've heard, and it's not just hotels, it's in the restaurant business too, it's that plus or minus minimum wage type worker, there's just not enough people to fill the open spots. Supply growth in the industry is 2%. New hotels are being built, and the person who's making $10, $12, $15 an hour will get up and go across the street for a higher paying job, and that might just be 50 cents an hour. So it's been a headwind for hotel operators. It's pressured the bottom line, and wages have gone up roughly 3%. Benefits have been going up more than that, and that's greater than what RevPAR is going up, and that's not a winning formula for hotels.
Yeah. What would you leave our audience with related to the hotel industry moving forward through 2019?
It's a cyclical business. I think that's the thing to remember. You buy the stocks at extremes, extreme pessimism, extreme optimism. I think we're closer to the pessimism than the optimism side. And my charge would be to keep traveling. Go on vacation, stay in hotels, keep traveling for business. Keep those occupancy numbers moving higher.
That's right. Live your life. Have fun and work hard, right?
Exactly.
Well, Michael, thanks for joining us. Great information. Thank you, sir.
Perfect. Thanks for having me. Appreciate it.
If you'd like more information, their website is rwbaird, and that's BAIRD.com. Well, stay with us. I'm Michael Bull. We'll have more on the hotel industry. This is America's Commercial Real Estate Show.